Hello everybody. Today is Saturday, March the 2nd, 2013. My name is Michael Wright and this is the Weekend Elliott Way video. For those watching the recording, please do pause the video and read over the risk disclaimer. Okay, so let's jump first into performance. Ended off February in the green, marking the second consecutive month in profits. We closed out February plus 410 pips in a quarter. We'll go over some of the big winners, but that really extends January's performance of plus 503. Okay, so I want to really dig in because the big gains really came off of the last week, the last week of February. The market at that time was pretty clear. Everything was aligning, and as such, we took big advantage of it. Right? If you look at it, we did about a little bit over 450 pips, and just that short time period alone. All right. So for much of February, there was a lot of choppy price action, and then we seen it in our performance. Right? We started off hot, tamed, and then we came back. And that was really for price action. So I'm gonna go over that. But some of the big winners. Actually, every trade was in the green. No missed trades for that past week, so that bode well. On the top side, Euro Pound plus 157. The last quarter was booked for 220 pips. We also booked a Kiwi dollar for plus 124. Dollar yen 69 and a half. And then we started the week off with a Kiwi long 44 and a Euro dollar long for plus 91. So the early trades really took the stage and allowed us to really elaborate on that further. As for open trades, we are only currently in one open position. That is the long Aussie Kiwi. So this is the setup we called it out on. Pretty much is consolidating, but we're really looking to play this inverse head and shoulders, right? As long as 123 holds, our stop is at 123.13, but as long as 123 holds for support, which is this neckline, we are gonna be eyeing 125.50 about, okay? So looking to go to break even sooner than later. And with that being said, let's jump into the markets. Alright, so let's go first into our current open trade, which is the Aussie Kiwi. So, as I showed you with our entry, so far so well. Don't really want to call it too early in terms of that price action. I really like to not brag, but mostly stay comfortable as long as we get to break even about. I will go to break even a little bit above 124 and then still look for 125.50, which is the next top side resistance. Okay, so aside from that, we also had that momentum divergence, so that played out well and added confidence to that viewpoint. And then obviously that neckline. Not only is the descending trend line just around 125.50, but that is also the measured move. How do we get the measured move? We do the head to neckline, which is that's about 200 pips, and then you do the breakout. So we look at the same thing about 123.50, 125.50, right? So 200, then 200 difference. All right, so let's look at a couple pairs heading into next week's trade. I really like Aussie dollar since I'm bullish Aussie Kiwi. I rather play Aussie dollar versus Kiwi dollar, as I am expecting the Aussie Kiwi to head to the top side. So with that being said, I'm going to stay patient. There is some clear divergence that is starting to show for this to be a fifth wave, and at the same time you could kind of see it developing in a wedge. So I'm not really going to bottom pick this pair, but I will wait for a breakout and look to catch it on the run to the upside. At the same time, if we look at it from a Ichimoku standpoint, okay, nothing really to get us long yet, but it will in the breakout, and then the first identifications will come off of the Tenkan Kijin crossover to the top side, and that will add some clearance on that move. But again, the big picture still remains for that breakout on the wedge. Kiwi dollar, alright, if it does decide to break out, the next resistance is at 83.50. So here, only 100 pips versus, in my opinion, looking at the Aussie dollar, has about 200 pips in it, but that makes sense because we are still looking at 200 pips in the Aussie Kiwi. All right. Aside from that, euro dollar, from my viewpoint, so far so well. We had this round table midweek last week, but here I'm still expecting the euro dollar to head lower. I think we get some nice support at 129. Okay, 129 could provide some base support. That's a 261.8% Fibonacci extension, and then from there, that's only when I'm expecting for a bounce. We might not get as deep as 135. Reason being is if you look at it on a daily time frame, there is some resistance before that, more specifically 134 about. Okay, so that would be a clear retest. We just missed the 100% extension. I was expecting that around that, but you know what, we really took advantage of during the midst of it, so that played out well. And then even our long, we got in and out at a nice timing, right? So the timing was there, so that played out. Away from that, the pound dollar still a one-way train. Okay, I'm not really too fond of trading either the long or short side. If I were to trade it, I'd rather go long just because fade the move. Things don't tend to move in one direction. However, that has been the case for the pound dollar, marking its third consecutive weekly decline. Okay, but should the pound dollar finally start to gain some steam, resistance top is pretty far away. I don't think we rally that much in the pound. Supports just keep on breaking, so I'd rather wait for clear development. However, weekly resistance is around 156.60, and that would be a clear retest for shorts for moves below 135. Alright, so this alternative play is no longer in count, as we broke out of that triangle. So a further downside is what I'm expecting. So on the next rally, if the Aussie and Kiwi both play out, I will be looking to get into both positions and really holding those targets. I also want to place focus on the Aussie dollar weekly count, as we are still expecting that 98 area. We caught the short at the highs. We got out of it a little bit too early. We got out of it to start the month off, February. But now we're looking for a bounce back, and it bounced back to 104.50, as we said before, then short again for those bigger term targets. So we will call that out. And expecting that going further. Away from that, dollar CAD is also of interest with the recent break above the measured move. Though a setback is probably on the horizon, maybe into the 101.50 area. That would be a nice buy from our viewpoint, but we're looking for 105. Okay, 105 medium-term targets to match the 161 fib extension and a C wave extended move. So watching for that. Minor fifth wave before a deeper correction and then a further rally. So does seem to be the point that the dollar index will continue its journey higher. Okay, we see that here. Next big side resistance, not too far away, so be careful and watching it. Looking for a pullback first, but then a pullback should serve as a buy for one last hurrah to about 82.85, and that will match up what I was saying before with the euro dollar, as we are expecting the euro to have one more sell-off before really gaining some steam higher. So again, short term, start the week off really staying pat with the Aussie Kiwi, eyeing the Aussie dollar, and more so in the couple of days, a couple of weeks, eyeing euro dollar for longs, but matching it up with the dollar index. Alright guys, we'll see you all in the chat room. We'll be holding the weekend webinar tomorrow, Sunday, at 1600 Eastern, which is about 2100 GMT, and then we'll be back for the midweek webinar. At the same time, Liam will hold his two live events, and one for sure I know he's holding is the NFPs. And aside from that, expect the videos for the week, and feel free to Skype me if you have any questions. Alright guys, cheers and good luck trading.